Hello, welcome to Media Dialogues. I'm Anuradha Sengupta. Consumer goods companies that are at the leading edge of innovation and marketing have always had to make quick pivots to stay ahead of consumer expectations and competitors. Never static, the consumer landscape has altered dramatically in this digital age that's got accelerated in the last couple of years. To understand some of the deep changes taking place in this sector today, I'm talking to Saugata Gupta. He's the Managing Director and CEO of Marico Limited. The company with iconic brands like Parachute, Saffola, Nihar and Pure Sense, to name just a few, spans the entire spectrum from food and health to beauty care. Now, it had revenues of over 9,500 crore rupees last year, that's FY22, and has been at the forefront of acquisitions of DTC or direct-to-consumer brands. Saugata,
thank you for having me.
Thank you for being in the studio and on this show. You know, I was reading something in your annual report for the last year, which is FY22, and I'm quoting a bit of that. You said the last couple of years have brought a structural transformation in consumption patterns and shopping behavior. You want to tell us what some of these transformations or changes are?
First, I think even before COVID, what started off was the growth of the D2C brands.
Yeah.
And if you really look at the D2C brands, which initially didn't get covered by some of the retail audits, they slowly took out a lot of share of growth, of opportunity of growth from the traditional players, in the FMCG sector. So if you look at, and obviously e-commerce, modern trade, some of the beauty and cosmetic outlets, specialized food outlets, they drove that change. I think this got accelerated significantly during COVID. And therefore, so that's the first structural change where I think growth opportunities were taken up at the premium end by the D2C brands.
Okay, that's one.
The second change which happened during COVID and again got accelerated to a large extent, if you really look at it, is if you know that the packaged foods, the penetration of packaged foods in India is very low. And what got accelerated in the COVID, especially when people were at home, they were doing a lot of experimentation, they wanted to trust larger, bigger brands, was the adoption of packaged foods. And therefore, especially for in-home consumption, because out-of-home consumption suffered during COVID. And therefore, packaged foods growth happened, and especially with respect to health and wellness. The third area where I think there's been growth which happened in India is, if you notice in India, functional foods and nutraceuticals have a low penetration. And this is one area. I think there's a far more consciousness about health. I think during COVID, the biggest learning for a lot of people was that if you have other conditions, your propensity to suffer is higher. And therefore, people have become far more proactive in managing health. And therefore, I see that happening. Lastly, I think the structural change that happened is shopping behavior. I think e-commerce accelerated. And I think digital adoption, whether it's through e-commerce or even, I would say that ordering through WhatsApp with the neighborhood kirana, I think is equally a digital adoption. So I think digital adoption and shopping behavior accelerated. Initially, obviously, a lot of growth of the e-commerce happened at the expense of organized retail. I think that has got little changed because organized retail is back and the neighborhood kirana is back. With a vengeance.
But we are also seeing 10-minute deliveries now of everything under the sun. So in that context, you see the local grocery, the kirana wala or the local store managing to sustain themselves?
I believe in India, given the size and the fragmented market, I think every segment, whether it's the quick commerce, whether it's e-commerce, will coexist with the traditional kirana. And I must say that the Indian kirana owner is extremely savvy. They know how to run their business, they know how to transform themselves, and we are seeing that transformation happening. And as I said, India is a huge market, and therefore, even 5 years, 10 years down the line, while the share of the channels will change, I believe that the traditional kirana will continue to be a very, very critical part of the entire ecosystem.
How do you see the distribution, the lay of the land in sense of distribution going forward? You said the kiranas will stay. We talked about e-commerce, but how would you see this break up?
I think the way we look at it is not a one-size-fits-all strategy, but each channel has a role to play.
Yeah.
For example, in Marico, I see e-commerce as a driver of premiumization and innovation.
Right.
And especially also given the fact that it gives us a huge avenue for experimenting with D2C brands.
It's 9% of your revenues now?
That's right,
roughly.
9 to 10%.
Yeah.
And we are, I think, leading edge, and we will continue to, I think, acquire D2C brands. I see modern trade similarly a driver of grocery premiumization. I think one of the things that we are also seeing specialty channels like chemist cosmetics, which drives personal care premium. There are specialty food outlets and of course rural. And I believe one area where I think big FMCG players will continue to invest is direct rural distribution. And I think that will be a source of competitive advantage for people, because that drives quality of sales, that drives range selling. Rural aspiration for brands are high. As long as you make it affordable and available, because there is, as you know, there's significant amount of counterfeiting also that happens in FMCG brands. So therefore, I think direct rural distribution will be another avenue of growth. The FMCG story, I think, given the overall penetration of some of the categories in India and the overall, I think it's a very, very long-term story. It's a question of, however, continuing to invest. And of course, invest in technology. Technology is going to play a big part. And as I said, a completely channel-based portfolio and a channel-based strategy. I think that's the biggest shift that has happened.
So, you know, the e-commerce and the premium range of products or brands and the rural distribution, when you look at these two pieces, which are at two ends of the spectrum, what kind of resources are spent behind these two?
For our mass brands, the rural is going to be a big driver of growth. If you see, even in some of our categories we participate, rural market share is slightly lower than urban market share. So we continue to invest behind rural distribution, and as I said, it's just not presence, but I think investment in technology to track efficiency and drive productivity. As far as e-commerce is concerned, obviously the portfolio is completely different. And I think that's the biggest change that has happened, that I think that the differentiation in portfolio, if you look at the kind of people who handles digital brands, they are different mindset, the working model is different. That is why we are almost having two companies coexisting. We call it Engine 1 and Engine 2 in the organization, which handles the organization which handles digital brands. They have a far higher velocity of innovation. They take the philosophy of, think big but start small, scale up fast. They do things, multiple things, while the core business continues to do few things big. But I think the entire philosophy or the operating model is completely different now.
And this is very different from the way FMCG companies would be structured, right? Especially in terms of the sales forces as well, which are pivotal and vital to any FMCG company.
Actually, you're right, but I think our entire segregation has not happened just in the sales force, but even in the entire team. And so
across functions, you're saying?
Across functions, most of the functions.
Yeah.
I think if you look at our digital brands, for example, Beardo operates out of Ahmedabad, and we have let them operate out of Just Herbs operates out of Chandigarh. The other brand, which is True Elements, that operates out of Pune and Thane. They don't operate out. We have different sets of people, because I believe the capabilities required to succeed in new age businesses versus the capabilities required to succeed in scale business are completely different in terms of mindset. We have different operating models. The only thing we do, obviously, is that we look at capital, we look at portfolio, we look at compliance, quality. These are the things we control. But the new age businesses have far better independence to experiment and run on a separate model.
And what about marketing and brand building? Because that is, that is also an FMCG company's big expertise, right? So when it comes to the DTC brands which you've acquired, do you see, what do you see your role, Marico's role in this function?
So obviously, we have certain things which are common. Having said that, as I said, that the capabilities required to run mass brands and large scale brands versus the capabilities that required to run D2C brands are completely different. Having said that, what is happening is there is a lot of healthy learning that is happening from one another. For example, I think what the D2C brands learn is a little bit of processes. They learn some consciousness on cost and managing profitability, because here our D2C brands, which we are there, we invest and our focus is building to last.
Yeah.
We are not onto the valuation
Yeah.
game, but we are wanting to have a sustainable, profitable growth over the long term. I think a lot of, I think the biggest thing is speed, agility, digital marketing. These are the capabilities which the core businesses, the core marketing team is learning from the digital brands.
And for these digital first brands, you're planning to reach what, 500 crores in revenues?
Yes, 450 to 500 crores over the next 1 or 2 years. Yeah.
And these are all via these 3 acquisitions that you mentioned.
We also have some organic brands, which is Pure Sense, Coco Soul and Fitify.
You have over the years extended the Saffola food portfolio and brought so many healthy categories in. And then I look at True Elements and what they're offering. There seems to be a natural synergy. Though, of course, it's, even more specialized. At some point, will it be Saffola, True Elements by Saffola, Saffola True Elements? Does that kind of brand synergy and perhaps even fusion happen at some point? Or does that not make any commercial sense?
So, right now it's premature because they are True Elements and Saffola play 2 different roles in the sense that it operates in a premium niche market.
Yeah.
Saffola, in fact, the role of Saffola is actually to expand the total addressable market through getting into much more mass categories.
Yes.
So I believe there are 2 different journeys as of now.
You're saying there are 2 different journeys, and also there are pretty definite goals for Saffola. I believe the plan is to extend that food portfolio to be worth about 1,000 crore rupees in the next 2 years.
Yeah, around 850 to 1,000 crores.
Tell me a little bit more about that.
So I think if you really look at Saffola started off its journey as a healthy edible oil, good for heart.
With some very iconic advertising. I still remember it.
And then it moved from what I call a therapeutic space to a preventive space. Saffola is now a healthy way of living. And Saffola is all about things which are better for you. So Saffola operates within the 3 spaces, which is immunity. It operates in breakfast and it operates in between meals. And in between meals is the largest market because in between meals anything can be consumed. And therefore anything Saffola does is better for you, whether it's purity, whether, for example, you have launched peanut butter with jaggery instead of sugar. The oodles, instead of maida, we have oats and wheat. So I think Saffola offers a better for you option for people, and therefore we will continue to expand and perhaps in the next 6 months perhaps enter 1 or 2 more categories. And this is the journey. It's I think premature to comment on it, but we will enter definitely into 1 or 2 more categories. And the other thing interesting we are doing is now we are having a dedicated food distribution and a food go-to-market, which we have started in the 5-6 metros and we're extending it. And that will also drive synergy and just going to drive, in terms of acceleration to our food portfolio.
So all of that
and
together.
Tomorrow, True Elements also can get into that go-to-market also.
Right. Saugata, pause for a bit. We're going to take a break. But when we come back, we're going to find out how brand building has got affected because of the digital age. Stay with us. Welcome back. You're watching Media Dialogues and I'm talking with Saugata Gupta of Marico. Saugata, let's talk a little bit about demand. And it's very clear that volume growth has been lagging and rural demand seems to be a problem. But given that inflation, we believe, has peaked, given that input costs have come down, do you see this getting dramatically affected in the next few quarters? Do you see it like a surge happen as a result? What is going to happen where rural demand and greater volume demand is concerned? And I'm of course associating greater volume demand with greater rural demand. It need not be.
So you're absolutely right. I think the peak as far as inflation is concerned is over. I think if you really look at Q1 experience, the peak inflation, especially with respect to vegetable oil, I think that has come down. Crude is slowly coming down. And having said that, I think if you look at this quarter, obviously the softening has started. There were significant price increases that happened. And also what happened was significant amount of food inflation. Now what happens at the bottom of pyramid as you go down the population strata, whenever there is high food inflation, consumers tend to titrate FMCG consumption. So there's either downgradation or a switch that happens to a cheaper brands. So I see that change slowly happening, and therefore there would be a significant, it will happen gradually, but you will see some changes as far as volume recovery is concerned from the next quarter onwards. And I'm sure a lot of players, we have also started the process. Yeah, third quarter. And as you know, a lot of players, including us, have started providing the benefits back to the consumer in terms of value. Because if you look at any emerging markets,
have you dropped prices again? You've dropped prices.
Absolutely.
That's very nice to hear, because normally you don't see price hikes getting rolled back, do you, in the consumer goods space?
No, it does, because I'll tell you why. This time the price increases were unprecedented. At the same time also what happened was, if you really look at it, that led to some kind of a volume, stagnation. And a lot of growth that happened in the last quarter was actually value-led growth. Now, I think as far as emerging market is concerned, it's very, very critical to protect volume growth and market share. And therefore, I think I would think that you will see a gradual increase as far as volume growth is concerned from Q3 onwards.
And the price drops that you just mentioned, or the rollbacks, that's had an unlocking impact?
I've definitely seen in Saffola, because see, as you know that Saffola is a very metro distributed brand, so therefore you can see the impact far more quicker. A brand like Parachute, which is very well distributed, by the time the price drop happens, especially in rural, it takes significant number of weeks. So we are seeing that Saffola, as you know, Saffola last quarter didn't do well because of the huge inflation. We have seen that improvement happening moment we took significant drops in prices sometime in August.
The digital first brands, do you see them ever becoming as widespread, as well known and as iconic as the brands that we've grown up before digital came into our lives?
So if you look at even traditional FMCG brands, the success rate could be 3 on 10. In digital, maybe it will be 1 on 25, which will be scaling up to that levels. I think once you hit a certain scale, I think it's important that these brands, and we're already seeing some of the digital brands transcending into, brick and mortar in terms of getting into either modern trade or premium go-to-market in traditional trade. And therefore, it will happen to some of the brands. Having said that, I think it's important that for any journey, what gets you here will not get you to the next level. So I think the capabilities that are required, I think then in terms of traditional distribution, mass marketing will start kicking in. So therefore, I think the 0 to 100 crores or the 200 crores through digital is very much possible. But beyond that, you have to move. And that is why I think where strategic partners like us come in, which will help these brands actually to do that scaling up.
Let's talk a little bit about the international markets. I think Marico, your brands are available in about 25 countries across Africa and Asia. And they're contributing pretty significantly to your revenues today. So give me a sense of how these brands are doing in these markets.
It's actually 3 big segments. We are present in the rest of South Asia, with Bangladesh being the largest market. We are present in some parts of Southeast Asia, which is Vietnam, Malaysia, Myanmar. When we are present in Middle East and Africa. Africa, again, our presence is limited to North Africa and South Africa, and we are now expanding in certain markets. I believe we have a very strong, successful model in Bangladesh, and we are now replicating it in Vietnam and Middle East. I think if you look at it, our model is local instead of global. We have clearly hair nourishment as a big driver in some of the markets like Middle East, and also male grooming. The Bangladesh market is like the India market. Having said that, I think we are far stronger in terms of distribution and brands, and therefore we have been able to expand into new categories like shampoos, baby, and these categories which have been successful diversification. If you look at any international market, I think we strongly believe you have to get 4 things right. You need to have the right portfolio, you need to have the right go-to-market, you need to have the right cost structure, and you need to have the right people and processes. And wherever you have to replicate that. So therefore, the Bangladesh success, we are now planning, we are replicating in Southeast Asia and also in Middle East. The international business is now very profitable. We have a 23 to 25% operating margin. In 2014, it had a single-digit 9% operating margin. We have invested organically, and one of the other interesting things we have done compared to a lot of other companies that we have grown far more organically in the last 6-7 years rather than inorganically. And we are pretty confident in spite of the fact that obviously there are headwinds in certain markets because of inflation, because of currency devaluation, that over the medium term, I think we have a business model in place which can deliver continuous double-digit constant currency growth.
Is it exciting to see Indian brands or brands that have originated in India and all these far-flung places of the world?
Absolutely, as long as I think there's a focused approach.
Sure.
I think a lot of times when the people expand, they use the spray and pray kind of a model. I think it needs a focused approach. It needs a kind of a discipline. I think we used to run a lot of these markets with Indian expats. I think localization of talent, ability to attract local talent, and therefore
has made a difference.
Has made a significant difference because the skin in the game is far higher when you work with local leadership. And that's a significant change we have done. The second thing is, of course, taking risks. For example, if you really look at some of the categories we operate in international markets, are very, very competitive categories. We don't operate in India. Shampoo is a big category in some of our international markets. So ability to, face that competitive intensity and also I think we have generated a significant amount of resources to fund that investment there. And that's the reason I always believe that while you repair the plane, you have to fly. You can't say, I'll first repair and fly. We have been able to do that quite successfully in international markets. And I think we have one of the best international businesses which is consistent and continues to profitably grow amongst a lot of the peer companies.
When you look at India and you hear statements like Reliance Industries made at its AGM saying this year we will launch our FMCG goods business, how do you react?
See, I think this market is very big and I have a very strong belief in the India story. The headroom for growth in India is tremendous. I think for every company to succeed, existing companies, they have to continuously innovate, and it is important that it has to continue to deliver consumer delight at the lowest possible cost. So if you look at COVID also, or if you look at any such disruption that has happened in the world, always the strong gets stronger and the weak gets weaker.
So how do you react to a big company which is already well entrenched in distribution and on the retail front come into the market of the FMCG sector?
So I think obviously, the competitive intensity
how do
will
you react
go up.
to it? Like what is the one thing you're looking for or looking out for or looking at?
I think, as I said, that I think obviously this market is big for a lot of players to enter, and it is very important that for any company to continuously succeed has to ensure that for any FMCG company to manage cost structures so that it delivers value to the consumer, continues to expand distribution, continues to innovate. And as I said, the market is big enough for a lot of players to succeed.
Okay. Saugata, thank you very much for having this conversation. I wish you and the team at Marico a lot of good luck.
Thank you.
And festive season greetings.
Thank you.
Greetings of Durga Puja and Navratri and all now cascading down to a lot of other festivals, isn't it? Thank you.
Thank you so much.
Thank you very much for watching. Catch Media Dialogues again if you want to look at business through the top line lens and if you're looking for insights. See you soon.